Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. If there has ever been a week I have been pumped for a show, it's this week, because we actually have a lot of exciting, crazy things to talk about with a WASDE report that came out, some questions that are going on with these numbers, some thoughts as we move towards November, and what about looking at 2025's growing season? And you're going to see the two gentlemen that we are bringing on the show this week to fill in all the gaps as to what happened in the trade today and what could happen come Sunday night into Monday. Stick around. More is coming up after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. As joining us, we have got John Payne with Advanced Trading and, of course, Darren Frye with Water Street Solutions. And gentlemen, I said at the beginning, at the open, I was really pumped for this show because this WASDE report brought some excitement, a lot of chatter that I saw socially online. And before we even look at the numbers from today, I do want to find out what was your nugget of trading information before today. So what was the thing that caught your attention in the markets from Monday until Thursday? And John, we'll kind of start with you first.
Well, it was the wheat market. That was really what moved the most. And, I think we all assumed that the crop was large. The USDA came in a little bit above those expectations, and I think really buried a lot of longs here. The carry is wide. Chicago is cheap, almost as cheap as it was pre-COVID. And I think that's kind of the scary thing if you want to be fearful. I don't think we're that far from a low, but we are only 50 cents really from where, the market would trade pre-COVID. And I think you look at where corn is and you look at some of the other markets, it's like, can we go back down there again? I don't think we will, but, given the supply numbers that we're seeing out of the USDA, it certainly is a possibility.
What about for you, Darren?
Well, the weather's ideal, and obviously we found more acres there at the end of June. And so I thought the funds would probably do some short covering ahead of this report, but they didn't. They pushed their short positions right into the report and really didn't cover that much even today, I don't think. But the markets are bearish and they're trying to find a low. And I do think that when we find a low, it'll be kind of a pre-harvest low, I think, and we can rally from there, just given how sizable the funds are on the short side.
Now let's dive into this WASDE report that came out today. Darren, what was your first takeaway when you saw those numbers?
I mean, corn was pretty bullish. Beans were blah, 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 and wheat was bearish. And I mean, that's how and it went home that way. Price action said, yeah, that's right. Beans are about unchanged. Corn's up. Wheat's down pretty hard. And so pretty bearish wheat, pretty bullish corn, I think, given what they saw reported today.
John, your initial reaction?
Yeah, I mean, I think I commented on the wheat. The corn number was friendly, across the curve. We saw the carryout come down a little bit on this year, which is very good to see. You look out the curve now, and the U.S. still the cheapest in the world. That's all should be supported. So now it's what does this July look like? Pollination weather, as Darren mentioned, is pretty good. I don't want to speak for everybody, but I was at the NPIC event this week, and the lack of complaining about crops is deafening. Farmers tend to be very, not exaggerate, but they'll let you know if their crop isn't looking good. And I just could not hear a whole lot of folks outside of the guys in Northwest Iowa and Southwest Minnesota that were really complaining, and even those guys weren't complaining too much. So as we go here, I think a lot of that's priced in, but you look at where September's trading relative to December. Do we see those deferred spreads kind of move lower versus the DEES 25 as we kind of wait to see what's planned in Brazil next year?
With any report that comes out from the USDA and NASS, there's questions. Do you guys have a lot of questions about what these report numbers had to say and how we move forward from those numbers?
Well, I guess I'll start. I have some questions just because the stocks report showed that we had plenty of inventory, and you would expect that the feed and residual would go the opposite way that it went today. Instead of them increasing that by 75 and saying that was up, It should have been the other way given the stocks. And so how we got the carry out down 175 in old crop and about 150 in new crop was simply the fact that they increased feed and residual. And as they did that, they totally ignored the stocks report here just 14 days ago. So that's a big question mark. And it's such a big question in my mind. I wonder if those are going to show up again in a subsequent report, like in September. Other than that, everything made sense on the bean and the wheat side for me.
What about for you, John?
Yeah, I'd echo that. I think the feed numbers for now, maybe you could justify the fact that we are where we are. But I think when you go out to the next years, you're going to see some shrinking. As I mentioned, being at that hog show this fall or this week, there's going to be consolidation and there's going to be sow killing, and a lot of that's got to take place here. And so between that and the feed numbers, I think we'll start to see them come down. Can we replace it with exports? I doubt it. Maybe on the margins in the short term, but in the long run, I think a lot of it depends on what's coming out of South America in 6 to 8 months. And then, of course, you have what's going on in the Ukraine. So I think, we're well priced here on supply, for where the carries are. I think if you want to look at one number, it would be soybeans. Just the fact that, yes, we haven't seen a whole lot of exports on the U.S. side. We're seeing U.S. crush really develop here. U.S. crush margins up front are about $1.50, which are as good as we've seen for a while. And even the back end is up approaching $1, where they're a little more expensive. And I think a lot of that has to do with soybean oil. Soybean oil's had a nice run this week. We were down around 43 cents to start I think going into that stocks report a couple of weeks ago, and now we trade closer to 47, even some of the contracts pushing on 50. So that is what you want to see if you're a soybean farmer. We need to see domestic use pick up to take away from the exports that we're not moving. And at this point, these crush margins should do a little bit of it. We just don't have the capacity to take it all away.
Darren, you're kind of shaking your head in agreement there.
Yeah, that's exactly right. We need to, have more of our beans be used here domestically. And obviously getting the used cooking oil in and some of the things that have gone on, importing that from China and other places, that's been a problem for the use of bean oil. So we got to see that rectified. And then, of course, be less dependent on export business to the world, especially to China, and do it more here at home.
So are we getting closer to an agreement between U.S. and CONAB when we look at those numbers in South America? Or are they still way far apart?
Yeah, we're still 5 to 6 million metric tons apart. And CONAB did come up a little on corn, went down a little bit on soybeans. But, that was a disappointing part of the report, I think, for me, was just the fact that they didn't change Brazil at all. And I really thought they would change Argentina more than 1 million metric ton on corn. I didn't expect them to change beans, but they came down a half. But the 1 million metric tons, I still think is way too high, given what I hear from private people down there.
John, what are you hearing from your?
Yeah. And I just look at price, and I'm going to read to you the forward curve and then the current spot prices. So U.S. is 477, Brazil is 490, and the Danube River, which is Ukraine, is 481. U.S. has not been cheaper than the Ukrainian Danube River since the war started. So that is a good sign, I think, for prices here in the U.S. And then you look out at the forward curve, it's still that way for the next 2 months. And you actually see the P&W get cheaper. So, the U.S. is well in a good spot here to move corn. The question is, what happens if we rally 25, 30 cents? Do the Brazilians come with it? And then, of course, what are they going to plant next year? And that's really where, I work with buy-side clients too. And buying corn is hard because, guys don't want to buy corn now. They can get it hand to mouth pretty easily, but it's like, where do you want to start buying next year's crop? And I'm talking about 25, July and then December for what's going to go in the ground in Brazil, what's going to go into the ground here a year from now. And I mean, we're cheap. We're really cheap relative to equities. And so if you have the ability to price some of this stuff, go out and spread, which is ratio, the S&P 500 versus corn versus beans versus wheat. I mean, we're as cheap as we've ever been, historically cheap. So I'm not saying one's going to crash and one's going to rally, but I think those will rectify themselves at some point where demand is good and you start to see food prices here in the U.S. come down a little bit. I think earnings will be strong, and I think there will be some buyers here. They're just not going to buy the spot. They're going to be out here buying the deferreds in some way or the other. And that's a challenge for a guy like me who you want to buy the low, but at the same time, do I want to buy 450 corn for next year right now with the front months trading sub 4? That's a risk. So, but we'll see what gets planted here in the spring, in the fall for Brazil. that'll be a nice indicator for us to see what what soybeans and corn look like for the next year.
So, Darren, if we can be some of the cheapest in the world, how much? I mean, okay, I know the answer to this when it comes to political, but why can't China, or why doesn't China say, okay, fine, I want to save money, I'm just going to buy from the US, they're cheaper than what South America is? Or does it
Well,
come all down to politics?
Well, they're economic buyers, so if it is cheaper delivered in there, they will buy from us. But if they can kind of get around that, and it's just a very close bid and offer on what they can get out of Brazil versus us, they're going to go to Brazil unless they've run out. Now, one of the things I've seen is their FOB prices have really come up, and I'm not sure. I mean, it doesn't feel like Brazil is going to be washed with corn here, even though they got this decent crop coming. It's smaller than last year, but still big. But we're competitive, and especially as you get out September, October. And so you take that along with the Ukrainian dry weather, hot weather they're getting, I think our exports could be pretty good as we move into 24, 25.
We see some lower numbers. I'm seeing some, lower 4s, some 3s concerns when it comes to cash sides of these market. How low could we see these grains go before they start to?
Yeah, I mean, I think it's more of like how low do we expire the September contract, and then does December go there, and then does March go there, and then does May go there, and that's really where that carry can eat you up. I think we'll find a low here in the high 3s, just based off of some other markets. But one thing I'll mention on China has food deflation right now, and so they don't need to buy to curb inflation, and that is something we didn't see, coming out of the financial crisis or coming into COVID. Chinese economics are brutal right now, and they've oversupplied their markets. They have too many hogs, so they're seeing some liquidation. Long term, they're going to need it because they will have inflation, and that's a good thing. They'll have the ability to ease their currency and do some things to help boost their economics. But in the short run here, I'm skeptical that China's going to come in here and save the day. It just doesn't feel like they need to do it, given the numbers we saw today.
All right, we're starting to run out of time, gentlemen. I want to, what is your one thing you want to look for going Sunday night into Monday's trade? Darren, for you?
I think we're going to get a bounce here, a small bounce maybe in wheat and beans that needs to be sold, a bigger bounce in corn. But ahead of a big harvest, I don't know if the crop's going to be 175 or 185 or something in between. But no matter what we get for a bounce, you're going back down, probably test lows or make a new low into harvest.
For me, it's interest rates. We talk about WASDE today. I think the bigger WASDE report will be in a month, so you can have us back on and we can do this again. But the interest rate story here in the U.S., we saw, basically at 6-month lows now in the 10-year Treasury. Those are all kind of tailwinds for the farmer. The U.S. farmer is dealing with the hardest currency to trade right now, the hardest to acquire. Nobody politically really wants to deal with the U.S. anyway, and yet we're still the cheapest in the world when it comes to corn. So, we have some upside here when it comes to currency. The question is the Fed going to follow through here and cut rates? That remains to be seen. So we'll see what the Fed does. I think they meet next week, I believe, or maybe it's the 20th. And then we'll see what those interest rates do, because those are the replacements for, if you're going to sell corn and put money somewhere, you put it in treasuries, you're getting a rate. And if you store it, you're not.
All right. Thank you so much to both of you for joining us this week. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. That's been this week's Nebraska Soybean Board Weekly Market Roundup.